Welcome to today's stock market news update. To kick things off, let's begin with the latest US job figures. The US Bureau of Labor Statistics released the August jobs report on Friday, showing the economy added just 22,000 non-farm payrolls. This fell short of the expected 75,000. July's numbers were revised up to 79,000, but June's were cut to negative 13,000 after further adjustments. June now stands as the first month of outright job losses since the pandemic period and ends the second longest streak of job gains in US history at 53 months. The unemployment rate climbed to 4.3%, matching forecasts and marking the highest level since 2021. The Secretary of the Treasury, Scott Bessent, predicts last year's jobs figures may be cut by 800,000 in next week's benchmark revision, while Goldman Sachs estimates a reduction of 550,000 to 950,000 jobs. Soft jobs data like this could shape Federal Reserve interest rate choices, which tend to sway bond and stock markets. BLS data also shows US manufacturing jobs declined by 12,000 in August, with a total drop of 78,000 for the year. Since tariffs were announced in April, the sector has lost 42,000 jobs so far. Losses in core industries like manufacturing could indicate slowdowns, impacting industrial stocks and growth forecasts. Youth unemployment for Americans aged 16 to 24 reached 10.5%, crossing 10% for the first time since the pandemic. Higher joblessness among younger groups could curb their future buying power, which may pressure long-term economic signals in markets. Shortly after the BLS job figures were released, Trump posted on Truth Social that Federal Reserve Chair Jerome Powell waited too long to cut rates. Canada lost 65,500 jobs in August, pushing the unemployment rate up to 7.1%. This was much worse than forecasts for a gain of 5,000 jobs and followed July's loss of 40,800 jobs. Such weak labour numbers could hint at economic cooling, possibly affecting currency rates and trade flows that touch North American markets. The US federal minimum wage remains at $7.25 per hour, unchanged since July 2009. Fortune noted this is the longest stretch without an increase in US history. Households, mutual funds, pension funds, and foreign investors have pushed their allocation to US equities to a record 55%, up 4 points in 6 months. Goldman Sachs reported this tops the 51% seen at the 2000 dot-com bubble peak. Cash holdings are at 13%, close to a record low, while bonds and other debt sit at 17%, the lowest since the 1980s. Such high stock exposure could magnify market swings if sell-offs occur. The S&P 500 price-to-book value now stands roughly at 5.3 times, exceeding the 5.1 times high from the 2000 dot-com bubble, according to Bloomberg. Refinitiv data from August 14th shows 27% of S&P 100 companies trading above 50 times earnings, with roughly two-thirds trading over 30 times earnings. Elevated valuations could flag potential risks if investor mood shifts, touching overall market steadiness. S&P 500 buybacks are lifting earnings per share by cutting share counts, making profits appear stronger even as most companies post flat or lower growth. The top 10 firms drive real expansion, while others lag. This setup could skew perceptions of business strength and guide investor choices in stocks. In the US, more senior citizens are buying homes than Gen Z and millennials combined. Fortune highlighted this trend, which might stem from wealth differences or choices, shaping housing sector flows and linked investments. Fortune also reported that in the US, people typically clear student loans at age 45 and mortgages around age 60. These extended debt periods could restrict spending and saving, influencing growth indicators that markets track. US commercial real estate office delinquency rates on CMBS loans hit 11.7%, the highest on record. Climbing defaults could strain banks and real estate values, sparking concerns in financial markets. Subprime auto loan delinquency rates in the US have crossed 5% for the first time. The 60-day rate has more than doubled in 3 years now 1.5 points above the 2008 crisis high. Prime delinquencies reached a 15-year peak. Total auto loans hit a record $1.66 trillion in the second quarter of 2025. Growing delinquencies could impact lenders and underscore consumer challenges affecting credit markets. VantageScore, a credit scoring firm, said US consumers with top credit scores are slipping on debt payments. Over 90-day late payments jumped 109% year over year for super prime borrowers and 47% for prime. This pattern among strong credit holders could reflect wider economic pressure, leading to stricter lending and market wariness. Google searches in the US for bankruptcy lawyer have quadrupled since January 1st. Such surges often indicate money troubles, which could preview consumer cutbacks. In the US, semiconductor stocks represent about 11% of the S&P 500, an all-time high, as top-down charts showed. This strong weighting means the index is more tied to tech developments, possibly causing larger fluctuations on sector news. Robinhood shares climbed in after hours, trading Friday after its addition to the S&P 500. Being in big indexes like this can draw more funds from investors, helping lift the stock. The European Union fined Google €2.95 billion, or $3.45 billion, for anti-competitive actions in the ad tech space. CNBC reported that the European Commission charged Google with preferring its own display ad tools, harming rivals, advertisers, and publishers. US President Donald Trump reacted to the EU's Google fine on Truth Social, calling it unfair and saying that the European Union must stop this practice against American companies immediately. He threatened a Section 301 trade investigation to overturn these charges on US companies. In a follow-up post, he noted Google paid $13 billion in prior false claims, totaling $16.5 billion, and demanded the EU halt this immediately. In an unrelated Truth Social post, Trump said, "Looks like we've lost India and Russia to deepest, darkest China. May they have a long and prosperous future together." This could suggest evolving world partnerships that influence trade routes and commodity prices. During a White House dinner with leading tech CEOs on Thursday, Trump warned of upcoming fairly substantial tariffs on chips and semiconductors for firms not shifting production to the US. He indicated companies like Apple, which boost domestic investments, would avoid the full hit. Tariffs like these could hike supply chain expenses, affecting semiconductor prices and wider market reactions. Tesla's board proposed a fresh pay package for CEO Elon Musk, seeking shareholder approval for over 423 million additional shares if decade-long milestones are met. Bloomberg estimated the full value could reach $1 trillion, the biggest CEO deal ever. Shareholders will also vote on investing in Musk's XAI. Elon Musk shared on X about a strong design review for Tesla's AI5 chip, calling it epic, with AI6 possibly becoming the top AI chip. Such hardware progress could bolster Tesla's self-driving edge, influencing its value and AI sector trends. Anthropic settled a class action lawsuit from authors for $1.5 billion, as CNBC reported. The writers alleged illegal book access by the AI firm. Payment is roughly $3,000 per book plus interest, with datasets to be deleted. If cleared, it sets a record for copyright payouts. This case helps clarify AI copyright boundaries, potentially raising industry costs or rules that hit AI company operations and valuations. OpenAI is ramping up in India, its top market for app downloads, per CNBC. CEO Sam Altman visited this year, eyeing more local setup and staff. August downloads in India hit 10.2 million, up from 2.5 million last year, totaling 111 million since launch versus 80 million in the US. Spending lags at $21.3 million in India against $784 million in the US. The new low-cost ChatGPT Go at 399 rupees or $4.53 monthly aims to pull in more users. Expansion in large areas like India could grow user numbers and income, attracting eyes to AI investments. OpenAI will begin large-scale production of its AI chips with Broadcom. This step might cut supplier dependence and expenses, solidifying its AI role and touching connected stocks. In Japan, Prime Minister Shigeru Ishiba plans to step down, as Bloomberg reported. Shifts in leadership can breed policy doubt, which may sway Japanese markets and worldwide views. Global meat prices hit a record high in August, according to the Food and Agriculture Organization. In the US, the cattle herd has shrunk to its lowest level in decades, while Brazil's export herds are also contracting. Rising dairy prices have reduced the supply of cattle available for slaughter. Meanwhile, strong US demand, combined with tariffs, has driven up the cost of Australian beef. At the same time, China has increased its imports of Brazilian beef. In the UK, beef and veal prices surged nearly 25% year over year. China's exports grew 4.4% in August from a year ago in US dollar terms, the slowest pace since February and below forecasts according to customs data. Imports rose just 1.3%, also missing expectations. Shipments to the US dropped 33%, hit by trade policies and stricter checks on rerouted goods, while imports from the US fell 16%. Even with the decline, the US stays China's top single country export destination, but Beijing is shifting more towards Southeast Asia, the EU, Africa, and Latin America. These trade shifts amid tensions could influence global supply chains, commodity flows, and currency values, which might create ripples in international markets. Now let's turn to the key US events to watch this week. Tuesday, the Bureau of Labor Statistics releases its 12-month data revision. Wednesday, the August Producer Price Index inflation report is released. Thursday, OPEC publishes its monthly report, along with the August Consumer Price Index inflation data. Friday, focus shifts to Michigan consumer sentiment and Michigan inflation expectations. These reports mark the last inflation data before the September Federal Reserve meeting. That's today's roundup. Stay tuned for more updates and don't forget to subscribe.